All right, so Alan gave me a lot of pressure because he said my portion of the presentation is much more interesting and exciting, and I actually don't know. So I'm going to talk about budgeting, monitoring your budget, and managing cash flow. Monitoring your budget, it's really just taking control of your goals, your financial goals. And really most of the entrepreneurs that I've ever worked with, they want to know, am I making money? And the only way to know if you're making money is A, to make sure that your accounting system on a regular basis can keep track of the cash inflows and outflows and what your profitability or losses are on a regular basis. And you need to compare that to your budget. So a budget is only a useful tool if you use it. If you keep your books up to date. If you don't keep your books up to date, you really can't compare how you're tracking what your actual is compared to your budget. Setting up budget financial information so that they mirror each other. That's an important item, so that your budget reflects what you anticipated would be reality. You should compare that to something very similar in terms of its format. Alan talked about short and long-term budgets, so those should be reviewed regularly. Again, long-term budgets being something 4 or 5 years down the road has probably a lot more assumptions than your current and short-term budgets. Readjusting the budget is necessary. So that was one question that was asked. And you should adjust your budget for various changes in maybe outside factors, economic crisis, or anything that would affect your business. But you don't want to adjust it too often, because what you're doing is you're really just ignoring your budget by adjusting it. So really your budget should be as realistic as possible. And as Alan said, on a quarterly basis or even a monthly basis, have a look at it, make sure it still reflects reality. I wouldn't adjust it too much, but what I would do is make sure that it's still working towards your goal. And when you do set your budget, we talked about earlier, there's one question, do some type of a sensitivity analysis. So you have your revenues, if they're, estimate your revenues, budget at 10% higher, 10% lower. Same thing with your expenses. So you see what your threshold is, and if your revenues come in 10% lower and your expenses come in 10% higher, are you still going to be able to succeed? Consider budget and actual results before making large purchases. So look for financing options, consider effects on profitability. So certain of your expenses will be capital in nature, so one-time costs that might be for asset purchases, and certain of your expenses are for regular day-to-day purchases. Okay. Why do you need to manage your cash flow? Really, cash allocation is a priority. It's like little kids with lunch money. So you give them a little budget, and if they blow it all on Monday, they're going to starve for the rest of the week. So money is your scarce resource, so you have to use it wisely. And managing your cash flow also helps you stay within your working capital goals. So you should be aware of shortfalls before they actually happen. Be aware of problems early so you don't have surprises. So again, by looking at your actual results, comparing it to budget, seeing where you're headed or tracking, you'll be able to detect issues or potential problems before they actually occur. You have a better chance on staying, to stay on the budget. And you can plan in advance for large purchases or low sales periods. Had one client in the advertising business, and because their revenues are either up here or they're down here, they had a summer period where they weren't, booking enough business. The cash flow dried up, and they came to us really last minute. Alan talked about a 45-day head start you had on one. They were about to die. They were like somebody was pulling the plug. So we really had to work with them, help them cut expenses immediately, look to gather cash from old receivables and so on, start to make deals and get some money. And they actually survived, and things are better now. But I think they learned a lesson in that they should have had a better budget. They should have compared to budget and seen where the cycle in their business was headed. Again, by managing your cash flow, it shows that you have an understanding of your business and the situation. Helps you plan for the future, determine financing needs, which Adam will talk about, and debt repayments. There was one question about when do you pay your shareholder loan back. So again, you may repay it in one period and then realize, oh, I got to put some back in. So have the flexibility to be able to do that. Okay, set up the accounting system to monitor the actual to budget. It's nice when there's automation. Alan talked about Quicken or QuickBooks. it's really nice when you can push a button and see your financial results, compare it to budget, do an analysis, and then yourself do an analysis as to why expenses are higher than expected or lower, same with revenue, and look at important ratios. So financial ratios would include things like, you know, how often does your receivable turn over? How often can you turn receivables into cash? Same with inventory. If you're selling some type of product, you want to know how often your inventory turns, so that helps you, guides your purchasing, in that you don't want to have too much inventory or too little inventory, which would limit your sales ability. Figuring out timing, so cyclical, seasonal, you know, if you're a pool company, a landscaper, you know, you've got seasonal cash flows coming in, you know, watch your expenditures on the non-cash periods. Consider obtaining a retainer or deposit prior to completion or of service or delivery of product. You have to be bold and brave. It's tough to ask for money, but you know, this is not a hobby, so you actually have to, don't be shy, ask for maybe some money up front, do credit checks, make sure you have credit-worthy customers, check references, follow up on receivables personally. I think that it does help develop good client relations. It helps you speak to your customer a lot more, and you know, remember that you haven't made money until you get paid. So you book the sale, you ship the inventory if that's what you're doing, or deliver the service, you haven't really made money. Nothing's in the bank until you get that cash. So cash is king. Keep good records, you know, official invoices versus handshakes. And also your invoices should also indicate unpaid amounts so that your customer knows that there's still a couple of invoices outstanding, indicate their repayment terms if there's interest on outstanding obligations, send monthly statements with handwritten notes, and so on. Any questions? Okay, ways to save money. Now everybody's listening. HST is replace the GST, so there's either monthly, quarterly, or annual filing. Usually a new business is immediately put into an annual filer situation. You may want to try to file monthly, so that if you have expenditures that will help you recoup some of the HST that you pay out, you want to recoup that as soon as possible. Also from a budgeting perspective, if you're very profitable and you're collecting a lot of HST, you want to remit that to the government because it really isn't your money. And sometimes what happens is an entrepreneur will use that HST money to build the business and then realize at the end of the year they've got a huge HST obligation. So it's better to probably pay it on a regular basis or collect a lot faster. Avoid unnecessary penalties and interest. That's where an accountant can help, or just some planning. You know when the government obligations, payroll tax or income taxes due, credit card payments. Question?
The HST payment, you know, some of the commodities are still, I think, 5% compared to the 13%. So is that still treated as HST, or?
It's still treated as HST.
Okay.
Yeah. Do your own research first with respect to purchasing. Use whatever resources and online tools that are available to you. There are government funding programs still available, although less and less on an annual basis. Research and development, SR&ED grants, offer significant incentives, so depending on what your business is. You might even, if you're dealing in foreign currencies, you might want to buy foreign exchange from a broker rather than from the bank, or deal with the bank directly and try to get your best deal. Identify needs versus wants, so you want to limit your cash outflows specifically to the needs of the business rather than to what you want. Be wary of buying in bulk, so understanding your business more, so how often do you need to replenish inventory and other supplies, so you don't want to tie up storage space, and you want to use your cash flow in the best possible way. Negotiate for the short term, so comparison shop, and don't tie yourself up with large commitments. Any questions? That concludes my portion. So I think what you should take away is that with a startup company, you have to spend money to make money, although you do have to spend it smart and look for benefits that can exceed the costs. Oh, question for that.
Are you familiar with wave accounting, and would you recommend it for startups?
Wave accounting? I'm not familiar with that concept.
It's a startup that offers, like it's a quicken replacement offered as a service over the web.
I've heard of it, but I don't honestly know. And if you want to, if you'd like to leave your name, if you want some information, I can get back to you. If you'd like to.
Will you recommend cash-based accounting or accrual-based accounting for a startup firm?
For cash flow.
For a startup firm, but
So we generally use accrual-based accounting. So that's what we'd recommend. But your budgets and your cash flows are generally done on a cash basis. So the concept of accrual really is more of a financial accounting and annual reporting. But on a regular basis, typically our businesses, they will do their accruals, so they'll accrue for various expenses that relate to the period they're reporting on, usually at the end of the period.
So what will happen in that situation, because it's a small business, let's say it's a service, you will probably record things on a cash basis with your cash flow projection. At the end of the year, you'll true up what is receivable and what's owing. Because as I said at the beginning, cash is king, and your business is going to be driven by how much cash you have to start and what's coming in before you're built in a position to pay out, obviously. And you obviously want to build good relationships with your suppliers who start by paying on time. So what we find, it's easier in the service business than it is with product, is that everything's on cash, and then at the end of the year, clients will tend to, then we'll set up the accrual side of it. So, that is, okay, I've rendered the service, I issued the bill, it's a December year end, I do have a receivable at the end of the year. That's where we also help, again, entrepreneurs who don't have a great accounting background, how to reconcile between the two, because eventually it will be on an accrual basis going forward. Product, you really have to be on accrual, but again, you develop budgets which can be based on cash flow solely, so you can plan accordingly. So there's matching the two, and that's where we come in and help out.
What would be the best time to get advice from professionals like you, like on the stage of building a business or later? Because on the stage of building business, you don't know pretty much anything, right? So you won't be able to ask professional questions, right? Or just questions usually to the business.
Well, I think, and Alan probably agree, is that it's probably good to develop a relationship with an accountant at the onset of the business, really because even though you may not know everything yet, you have your ideas, and one of the most important functions of starting a business is how do you structure it? Is it a sole proprietorship or a partnership or a corporation? And that's really the first step before you start your business is, what is this entity? Is it just a part of me, so a sole proprietorship, or is it a separate corporation?
Because usually you're scared to get huge fees from professionals.
Right. So as Alan said,
especially if you're studying business. So that's
right. So typically we'll sit down with a client for about an hour and just talk about what they're doing on a.
And there are associations and that I'm aware of. I know the bank is about, when I have a question in that area, because a lot of our clients are not necessarily startup, but some are. We'll call the bank and say, do you have any resources? We can find someone to help in that regard. Because in theory, you should have 3 professionals when you start a business: a banker, an accountant, and a lawyer. And you're right, there is a fair bit of cost. And there are resources where you don't have to spend that type of money necessarily because you can't afford it. And so there are people to help out in that regard. You want to respond further, Sharon?
Yeah, at the bank, in business banking, Adam handles the small business side, I handle the commercial side. We're always available at a no-cost basis for conversations with clients and prospects. That's part of what we do, is to help businesses in the marketplace. So we're happy, we have cards, we're moving behind, and you can always give us a show. But we work, we have colleagues such as Alan and Eli that are willing to give, an hour of their time as well from the accountant's perspective, and we can even sit down together as a group and see what you're doing and how we can direct you to get some more success.
it's good to know.
And it's important to have good resources available to you. I can't stress enough, in examples we've seen in the past where you don't have a network, it poses a challenge as you grow your business. The financial statements may not make sense when you come into the bank because while someone may have a law degree and an MBA, it doesn't necessarily qualify them to be able to give accounting advice. We've seen it happen before where it hinders a business sometimes because the advice that you've given is not going to support them going forward. So.
Would you advise to do it on a regular basis, let's say once a month or like once a year?
In which regard to?
Accounting.
Well, I'm just going to backtrack a second, but I'm going to the question. A lot of our staff, have friends who they go to school with, and some of those friends may not be accountants, and they are, and they may help their friends out at the beginning because they're friends, and then eventually we'll bring them into our office, or they may have other people they can go to. That's, sometimes small business goes with a smaller accounting firm, which is fine. So there's that added. In terms of meeting your accountant, it depends again on the circumstances. Startup, you may need to meet the person more often to help you get it going. If you're relying on an external accountant, you don't have a friend. Let's say two gentlemen, two ladies are starting a business. One's the entrepreneur, one's the marketer, and the other one's more in the finance end. So you don't need to go and hire anyone because they complement each other. We meet with our clients based on circumstances. And that is, some clients we may only see once or twice a year. Some clients we see monthly. We try, of course, to be proactive and call them before they call us. For example, some of my clients, I will meet quarterly for breakfast on the house, just to see what's happening in their world. What's keeping them up at night? What do they have concerns about? What's going well? If I see something that may be useful based on some reading I've gotten from the bank, from our tax group, I will then convey it to the client and say, I've thought about this. And so again, each circumstance is big. It's really, you gotta evaluate because we provide personal service. That's what, we don't provide a widget or product, we provide service. And it's important that you feel, not us, you feel that you're getting the value out of it. And if it means meeting once a month, meet once a month. If it means meeting every 6 months, meet every 6 months. Okay.
So I'm just curious, you had talked a little bit about free resources and government programs available. I'm just wondering, who would you say has the best advantage of actually accessing them? Young and those in school, or those older and has already established a business?
And you want to address part of the
It's a good question. I'm going to stand up just so I'm not with my back to anybody. Yes, of course. Sure. In terms of actually accessing capital, in terms of resources available, there's a number of different grants, and oftentimes I think when it comes to bank guarantees, it sort of guarantees the bank. So if you ever think of buying a house and you sort of have a certain amount of equity or a down payment to put into your house, there's CMHC, the Canadian Mortgage Housing Corporation. So it allows for anywhere from 5% to 20% down payment. Same is applicable for business clients or entrepreneurs who are starting a business where you can put less cash into the business and be able to borrow a higher amount, and it's being a startup business. So whether you're older or younger, there may be an impact in terms of your net worth, your ability to repay back the debt, because a startup business, a lot relies on you as the individual when you start. And so if you have, in whatever stage you are in your life, whether you're older or younger, and you have someone who can guarantee for you, you'll probably almost be on an even playing field. I would imagine if you're older, you probably have a little bit of a leg up because you've built up a net worth, you have a bit more experience. But it doesn't mean that it precludes you at a younger age of being able to start a business or get access to capital. So, and I've seen young entrepreneurs, 18 years old, who makes me, and it's a funny story, and I'll throw it in. He was using his personal account for all his banking, which really goes against what you want to see. And we write him a letter and say, you've got to close your accounts because you're not using it correctly. And when he turned 18, he incorporated the business. His mom removed herself as a director. And the business had $500,000 on deposit. And I remember sitting in this office with this 18-year-old who was going to first year university. And his mom's trying to pay him an allowance on a monthly basis to make sure he had money for living expenses. And he's like, no, Mom, I'm okay, don't worry about it. And he's saying to me, I'm not sure if I really want to go to school. It's going to get in the way of me running my business. And so, you know, at any age, I don't think it's going to have an impact. I think the resources are there. And I would certainly recommend you check out, you know, financial institution websites, because no matter who they are, they have great resource centers, and they can oftentimes give you access to where grants are available, access to capital that's outside of the loans that you may be able to qualify for. Does that answer?
This is a question for Alan. I just want to know the difference between, what's the difference between an accountant and a bookkeeper? Because we're at this entry level, we're just trying to get our businesses going.
Great.
And we're in the process of going out and getting customers and, you know, and going through the whole sales process and the whole 9 yards. We're building up these numbers. You know, what's the difference between, you know, starting off with a bookkeeper and then eventually moving into an accountant?
Well, you could have an accountant in your business as well. A bookkeeper is basically, as it implies, someone who takes care of the books and records, recording your sales, your purchases, your payroll, etc., etc. And basically, it's very, you know, it's just a functioning record keeper. An accountant within an organization, a large organization, will have somebody who's called a controller or a CFO, financial officer, right? That is more of an accountant, because what they do is they're going to take that information and they're going to analyze it. They're going to look for trends, and they're going to look for things that stand out, good or bad or ugly, as you like to say. So that's on an internal basis. So when you're starting off a business, some of our smaller clients, we use freelance bookkeepers, which we have a whole, I like to call inventory of freelance bookkeepers who will take care of that. They may even, including, you know, taking care of your payroll and your commodity tax, etc., and work with us so that, number one, they're not there full-time, they're part-time. They charge you per diem, $50 an hour, $40 an hour, and handle that for you. Then the package will come to the external accountant, such as us, and we'll put it in the form of financial statements, do the tax returns, and help on the planning side. That's the external accountant. So the bookkeeper is really just a record-keeping function. Some are better than others. Some have better tools and ability that if they see a problem, they'll know it. Some won't have a clue. And the ones who know it will, if they're working with us, will send us an email and say, you know, I just noticed this problem. How do you want to handle it? So I've been fortunate to find a few very excellent ones. You know, ones that return phone calls, ones who get you to work when they're going to tell you they're going to get it. They use QuickBooks. They put together a package, put it on a disk, give us a bit of a hard copy of some areas of the package, and they're great to deal with. Others, you know, you find out they don't promise what they're going to deliver, and we kind of say, maybe you should work with other accountants and be successful elsewhere. Can I answer the question?
Technology startups. Do you help with term sheets or putting together term sheets or advising on like how a term sheet should look like?
Sorry.
Term sheets.
Well, sure. Our role in Comfort with dealing with the bank on the term sheet. The bank could probably answer that question better, and I will defer to Adam with only one thought. We obviously help, as I'm doing with this client, help our clients get financing. And we will look at what the bank puts on a term sheet. I'll leave it to Adam to define in more clear terms what that is, and assess and critique it and help get the best opportunity deal for the client. I think it was mentioned this before. You're starting off the business, and there's going to probably need somebody to guarantee it. Obviously, in a business that's starting up, that's usually the case. Either you yourself will provide personal assets as guarantees, or someone else, a relative, to guarantee it. In an established business, that may be less so, depending on the nature of the financing and the nature of the business, and et cetera, et cetera. There's a number of criteria. But what we try to do for our clients in an established business, for example, is try to remove the personal side from the business side. The whole purpose, generally, of incorporating a company is to keep your business separate from you personally, to protect yourself. It's one of the main reasons why people incorporate, limit liability. But what breaks that veil is you get a bank loan and you have to provide personal guarantees. And you may have to in the beginning do so because you don't have enough equity in the business. But as the business grows, it's established, over time, there will be enough there that the bank may feel comfortable with removing the personal guarantees. The term sheet, we look at it and we assess what's the security, does it make sense, what's the bank's reasoning, and then, very good reasoning, and then we'll say, okay, well, is there a possibility you can reduce the personal guarantee if the client provides something else? And we go back and forth, and we try to work together with the client so the bank's happy with what they provide and they're covered, and the client is covered. So you may want to go into term sheets a little bit more.
Are you talking more for startup, or are you talking?
Yeah, I was talking about sometimes, in a startup scenario, let's say presenting a business plan to a angel investor or next stage.
Or straight to an angel investor?
I don't know, like if banks help with the equity-based investment or.
So it depends. So if we were, when I talk about the Canada, I'm just going to put this down so I don't bang it and start making noise as I answer your question. When we talk about term sheets, when you're looking at financing for a bank for a startup company, and in terms of involving an accountant, where applicable, and where I think money allows for it, as it's been discussed before, sometimes it is expensive, you should engage with an accountant where applicable, because they can assist with, as discussed earlier, in terms of creating a financial forecast and planning. Because when you come to a bank, it's more for a bank than an angel investor, for example, and I'll talk a little bit about the Canada Small Business Financing Loan because I think it's the most applicable. Banks are going to look for a certain number of requirements or documentation to come in. So one is going to be the business plan, two will be the financial projections. And obviously the banks can be looking towards it being realistic in terms of the projections. And you don't have to, I'll certainly say you don't have to engage an accountant when you come in with your financial projections, but it certainly lends credibility. And the bank will, at that point in time, be more comfortable with the projections when we see it. And in terms of the financing itself, the Canada Small Business Financing Loan is great. The main reason why we recommend it to a lot of startup business owners, as Alan has said, there's going to be an element of your personal liability. If you incorporate, the goal is obviously to eliminate your personal liability, and banks unfortunately will want that personal liability to be there. But where applicable, with the Canada Small Business Financing Loan, your personal guarantee is limited to 25% of the loan amount when you're a corporation. And what it allows for startup businesses, it allows you to do startup of equipment, for leasehold improvements if you were to buy an office or rent an office space, if you're purchasing real estate, and there is a specific component to technology. So certain aspects are, and certain aspects are not eligible. And as I think Sharon said earlier, you're welcome to come in and speak to the bank. If you go onto Google and you type in Canada Small Business Financing Loan, or the Canada Small Business Financing Act, you'll actually be able to download the guidelines. And if you can't sleep at night, it's about 92 pages. But within the actual index itself, you'll be able to find a section that speaks to eligible and ineligible loan classes. And there will be a specific section to technology. I have done it before for clients who've done proprietary software development. They created their own website and they were selling a specific item, I can't recall it, I think you do know, and where they created the software and they engaged another company to do that. And I believe we also did one where the company itself created the software. I think they had to get a third party to give a quotation to verify sort of the money that was going to cost to do this. So it is eligible to be done. Again, and with an accountant to sort of help you with the financial projections, industry specific, it helps. so you can get a realistic business and forecast in terms of what you're looking to do. And as Alan said, as you grow your business, and there'll be certain things and tests that the bank will need to see in terms of the debt to equity, so how much equity you have in your business. I know Sharon was having a heart attack every time Alan said, take money out of your business, because for us at the bank, we do a test to make sure that the business has a certain value in the business. There's also, when it comes to being able to debt service, so your accountant can help, because there's certain things that the bank will look for, and by having certain fields and meeting certain guidelines, it can improve rates. So that relationship, and I think it was mentioned earlier, the relationship of your lawyer, your accountant, your banker, is something you want to have and grow. Because the more that everyone talks, the more successful you as a business owner is. Does that help?
Yeah. Alan, I have a question for you. Let's take an example. If in the first year of operation, your expenses are 100,000 and your income is 100,000, but a portion of your expenses, say for example 20,000, you could only expense 50%, like entertainment. So as per the government now, you have made a profit of 10,000, but in real life you didn't. If it's equal, how do you deal with that situation?
You either pay taxes to the government, or you set up, potentially you could set up a salary to wipe out the tax profit. But that would create a loss on your financial statements. So you have to assess what's the lesser of two evils. Do you want to show a break even for accounting and ignoring the fact that you're going to owe about $1,500 of corporate tax on a $10,000 profit? Or do you want to set up a salary knowing that there's going to be a lot of business coming in the future months and create a small loss of 10 grand, thereabouts? So I think at that time you'd make an assessment. You know, if you have an accountant, they would help you out. And if you were on your own and you have enough accounting background, you make that call. So it really depends on what you foresee in the next few months in the business, who you're showing the statements to other than the government. Again, I know some of the answers I give may not give you clear cut, because each one is, you know, a separate situation, but it gives you some guidance. Those are your real two options.
Thank you.
My question is for anyone in the panel. Eli, you just touched upon the point that you would actually look for an accountant at the outset of your business. But clearly the sole proprietorship is very different than a corporation. I mean, the cash flow for either is very different, and I would assume that when I have a corporation, I do have an accountant. But when I'm a sole proprietor, what's the minimum you would suggest in terms of the amount of dollar, whether the cash was in the hundreds or thousands, that you would start looking for an accountant?
Minimum dollars in terms of revenue, or?
Yeah.
In terms of revenue. Well, I think that it's important to just have that initial discussion with an accountant and say, this is what I'm planning to do. This is, even if you jot down some number, this is what I think my revenues will be, my expenses will be. What do you think in terms of incorporating versus sole proprietorship? So I don't know that there's a minimum. I think there's also another, you know, incorporation, there's certain tax benefits to incorporating, depending on, you know, your personal cash needs. But also there's, legally, there's a veil between you and the corporation, which might protect you in terms of any litigation that affects the corporation. So there's other considerations before deciding whether you go sole proprietorship or corporation or any other vehicle. But it's worthwhile probably having a discussion. Thank you.
Thank you.